What's going on, everybody? It's your boy Bbwi. Welcome to another episode of Winners Win. Today we're going to be talking about 5 different stocks that I'm investing right now with the current market on this dip. There's so many choices, it's really hard to choose because honestly I could probably come up with at least 25 to 30 really good stocks, but we're just going to be going over 5 ones that I am currently investing in, and we're going to be talking about, the revenue growth, the profitability from the last quarter, and we're talking about, a little of the financials, why I think they're good investments, if they're a high risk, low risk play, and all the details. But please, before we get into that, please like, subscribe, leave a comment below if you have any ideas or any questions you may have yourself. I may make a whole video about it. So please go ahead, leave a comment, and let's get right to the video, guys. Alright, so the first stock we're going to be talking about today is Hanes brand. Ticker symbol HBI. I know everybody's probably familiar, but if you're not familiar with this company, they are very well known for their underwear, okay? Or you may know them from the old Michael Jordan commercials if you're a boomer like myself. Or you might be wearing Hanes because you go to Walmart. They're very popular and they are in a lot of retail stores, okay? So Hanes is one of those companies that I've been personally investing now for over 2 years. I love this company and I love this stock. This stock is mainly going to be, a low risk play. In my opinion, this stock doesn't really move much, so you're not really going to have a lot of upside. It's mainly going to be more of a dividend stock play. So if you like dividend stocks and you want to add something to your portfolio, I think Hanes is at a great price point to consider buying some shares right now. In my opinion, they are one of the best dividend stocks in my portfolio. Alright, so let's go. I think right now they're at a $5.7 billion market cap. Extremely huge for the apparel manufacturing industry. The dividend yield for this company is 3.68%, which is really solid. I try to aim for about a 4% yield, so 3.68 is really close. I really like that number. And what I really like about this company is during the pandemic, I held them and they continued to pay out a dividend the entire time during the pandemic, or even still, because we're still in this pandemic, they're still paying me dividends. There are many other dividend stock companies that I had that, stopped their dividend. For example, BMW, for example, Ralph Lauren. I ended up selling BMW and Ralph Lauren because, in my opinion, I like to invest in companies and stocks that are pandemic proof. So if they do go through, a big crash or something happens to the market, my companies are still paying me dividends. So if they pull that dividend, I typically don't like to invest in those kind of companies. So this is a great company that, if something does happen in the market, they're not going to tank. It's a very mature company. They're still going to pay you those dividends, and you can hold on to them long term, and they will, in my opinion, be a great long-term investment if you're considering a dividend stock, right? Now, the fair value for this company is going to be a $26. Yes, so fair value, $26. What does fair value mean? That means if you buy a share of Hanes for $26 or less, I believe you're getting it for a fair price. So it's a good deal, right? You can hold it and it'll probably more or less get your money back in the long term, and you'll be getting those dividend payouts every quarter. Yes, they do pay out quarterly. I should have mentioned that earlier. I love companies that pay out quarterly. I've talked about this many times. I hate getting a dividend, twice a year or only once annually. It's just not it. I need my dividend quarterly, especially if it's a company like Hanes where their stock is not really going to be moving up and down a lot. There's not too much upside, so you're not going to be getting that capital gains. You really want that dividend every quarter. Okay, and now the actual Drew price, meaning the 5-star price where I think you really want to aim for this company, is $16 and below. So if you can get this company or this stock for $16 or less, that is an absolute steal in my opinion. And last time I looked, they were at $16 and about 46 cents. So they are really at a good price point to purchase. Like I said earlier, it's a real low risk play. So it's not one of those ones that you're gonna have to worry about, like these small cap stocks right now that are just tanking. You know, my Hanes, I'm still up like 30% right now in this decline. I bought them at a really low price. I bought them at that dip, like when they were like $8. So I'm doing pretty good right now. I'm double my money. I said 20. I don't even know what the percentage, but I'm doing really well. I'll probably post so you can see my Hanes shares right now. And yeah, so the revenue for the last 3 years has been averaging about 6.8 billion since 2018, which is a lot of revenue. It hasn't really been growing too much since the pandemic. I do think it hurt them a little bit. You know, a lot of retail stores are having issues, period. So the industry is kind of hurting as a whole, but that revenue is still really solid. And I also like to invest in companies that have a strong brand. Hanes is one of the most, strong brand when it comes to underwear that I can think of. When I think of underwear, I think Fruit of the Loom and Hanes. Those are the first two that come probably into a lot of people's minds, or maybe Calvin Klein or Ralph if you're a little bougie like myself, right? But nah, it's a great company. They have a solid asset to debt ratio, a lot of cash on hand. The gross profit margins for last year was about 32%. So pretty good gross profit margin. I like 60% usually for a lot of these companies, but 32% is good. Now this is where the problem is with Hanes. Last year they had a net profit margin of -4%. So last year they didn't net much there on that profit margin, and that is really hurting this company right now, and they did tank because of that, in my opinion, over this last year during the pandemic, as a lot of retail stores did. I invested into a lot of retail stocks during this dip. I think you can take advantage of this play yourself. But yeah, guys, so if you get this stock for under $26, it's a deal. But if you can get it at $16 or less, it is an absolute must-buy stock if you have a dividend stock portfolio and you want to add a stock. Alright, so let's go ahead and move on to our second stock here. Alright, so this next company we're going to be talking about is one that you might have heard before because it's really popular, and it's something that I have talked about before on my Instagram, and that is Palantir, ticker symbol PLTR. I am a huge fan of this company. I know there's been a lot of talk about it, but it's a software data application company. Sorry, excuse me. And the market cap right now is $26 billion for this industry. Huge market cap, right? Now, right now, this play is not going to be a dividend stock. For me, this is a long-term growth stock play. So if you're looking for a growth stock to buy right now on this dip, in my opinion, this is going to be one of the best plays that you can have because they're at a very low price point, and I honestly believe in this company as a very long-term hold, and you are probably going to do really well if you buy right now in this market. So yeah, guys, no dividend. So no dividend yields for Palantir. This is strictly going to be a buy and hold long-term, in my opinion. I don't really see it as, a short trade. A lot of people are trading this stock right now. I'm not really a trader. I'm going to buy and hold this one. The fair value for this company, we're going to be doing $31. So $31 or less for Palantir stock is actually a fair price, which a lot of people would be really surprised to hear that. I had a couple buddies hit me up. They're freaking out because they bought some Palantir as well, and they've been tanking. But really, I want people to kind of adopt the ideology that whenever one of our favorite stocks are dipping, we should get happy because now we get to buy more and become even more rich, okay? So this is a great opportunity to get in on some Palantir stock because right now they are currently at $13, and the Drew price, aka the 5-star price, is $18 or below for this stock. That's right, guys. I think it is an absolute steal if you can buy Palantir for $18 or less right now. And currently they're at $13, guys. So if you have any money right now, I think now is the time to get, that bonus check that's coming up and start loading up on some Palantir, because they are absolutely going to be killing it in the future. And I am really, really confident in this company in the next 2 to 5 years. It is another long-term hold for me. I would say this is more of a higher risk play than, say, our last company, Haynes. They do have a lot more upside, right? So higher risk, more upside. That's how it goes. I do believe that this stock could be up in the 50 to 75 area over the next 2 to 5 years. They're absolutely great company. The revenue growth is 35% last year. So the revenue growth has been killing it year over year. The assets are increasing. The debt's been about staying the same. But they do have a really good asset to debt ratio. Now the gross profit margin is at 77%, which is great. As I said earlier, I like it over 60%. So gross profit margin is looking good. But the net profit margin is negative 35% last year. So they're spending too much money on operating. Maybe, I don't know how much operating expense is really going to be for a software company, right? So it's probably going to be something else that we don't really know about that could be going on to affect the actual net profit margins of last year for Palantir. But more likely than not, it's a newer company and they're investing all the money that they have into research and development, and trying to get out to more companies, because I feel like one of the biggest problems Palantir has is marketing to other companies and getting that reach, right? I think they are a great asset to have for any company when it comes to that software data mining, but it's going to take a little time for these companies to realize that we do have to do better at marketing and getting our name out there. So yeah, the net profit margins are taking a hit. But I do think over the next, like I said, 2 to 5 years, that this will slowly rise and we will be making, hopefully at least, 10 to 20% net profit margins, and we will be killing it. Now, Palantir is much more riskier probably than any of the other stocks that we're going over today. But at the same time, this is probably going to have the biggest upside. And in my opinion, it's almost a sure bet. I believe in this company. I believe they're going to kill it. And yeah, guys, if you want to think about a huge upside play and you want to buy and hold long term, Palantir is going to be one of the best plays right now to get in the stock market. Let's go ahead and move on to our third stock today. Bath and Body Works. Yes. Bbwi is going to be the third stock we're going to be talking about. I think, this one is kind of slept on right now. Nobody's really talking about it. It's a specialty retail company, right? So there's about $14 billion market cap in this industry. Pretty big industry, and I think Bath & Body Works has been around for a while. I love the brand behind this company. They have a big name that a lot of people will recognize. Now, this company does pay a dividend, so this is another dividend stock, but the dividend yield is only about a 0.80%, so less than 1%. Not too high, but you still get that dividend yield. The fair value for this company is going to be $85. So $85 or less, in my opinion, is going to be, a fair price to buy and purchase this stock. But the Drew price, or the 5-star price, is going to be $59 or less. Now the current price is $56. So right now, currently, this stock is already trading below our 5-star price of $59. I think it is a very solid company to purchase. Over the last 2 stocks we talked about, it's probably about a medium risk. So it's not a higher risk than Palantir, but it's a little higher risk, than Haynes, for example, Bath & Body Works, and this industry has been hurting as a whole. So there's that, but I do think this company is worth investing, especially at this price point at $56. Now the revenue growth last year, they were negative 1.2%, so little down the revenue growth. We don't like to see that, but this is more of a mature company, and they did have a lot of hurt during the pandemic. So I do think this is one of those companies that is just a temporary thing where, the pandemic kind of hurt them, and negative 1.2% is not horrible, right? It could be a lot worse. I've invested in companies that are doing way worse than that, but could be better. So there is that to be of concern. Now the gross profit margins are at 38%, so solid gross profit margins, and the net profit margin is 12.31%. So they are netting a solid profit here on their margins. The only problem here, like I said, is that revenue growth. It is a little low last year. But yeah, guys, this is a great company. If you want to add to your dividend stock portfolio, another company to add that I think is going to be a good long-term hold that isn't going to be going anywhere. They have a strong brand, a solid dividend payout that they can pay out quarterly, and they have really good net profit margin, which we haven't seen in the other two stocks. So I do not believe this company is going anywhere, and they are here to stay, and they are another great pick when it comes to dividend stock plays. Let's get into our fourth stock now. Alright guys, so the fourth stock we're going to be talking about is Equifax. Ticker symbol EFX. Now this one is something that I just kind of learned about recently myself. This is one that I am excited about because I just purchased some of my shares. And this is going to be a consulting services company. The market cap is going to be $28 billion. And they do have a dividend yield of 0.67%, so not a very high dividend yield, but they do pay out dividends. They are a very mature company. The fair value for this company is going to be $340. So if you can get them for $340 or less, I do believe that is a fair price to pay for this company. Now, the Drew price, or aka the 5-star price, is going to be at $238. And the current price right now is $234 for a share of stock. So right now, I think it is a steal to buy this company, Equifax. This one is probably about a medium risk, not too risky, pretty mature company. The revenue growth was 14.50% last year, so solid revenue growth. Anything over 10% revenue growth is considered a growth stock, in my opinion. So this is like a growth stock that is paid a dividend. A very solid company that is at a price point that is extremely cheap. This might be probably the best stock that I talk about today when it comes to value and value alone. Now the gross margins are going to be 59%, so absolutely killing it yet again. It's almost at that 60% gross profit margins that we like, and the net margins are 14%. So they're making money. They have high revenue growth. They pay a dividend, and their current price right now is extremely cheap considering this company's financials, and it's a $28 billion market cap. I absolutely love this stock. I can't believe I'm just now learning about it. And out of all of these, different companies we're talking about today, if I had to choose one, this is probably my favorite that we are talking about today. I will be trying to buy as much as I can, as long as this is trading at below that $238 Drew price that we talked about earlier. But yeah, guys, that's it. Let's go ahead and get on to our fifth stock today. Alright guys, so the last stock we're going to be talking about today is Viacom. Ticker symbol VIAC. Now, if you're not familiar with this company, they are in the entertainment sector, which is a $21 billion market cap. They are, very popular for the channel CBS, if you're not familiar. Now, this is a company that does have a dividend yield of 2.95%, so a fairly high dividend yield, and another dividend stock that we're going to be talking about today. Now, the fair value for this company is going to be $61. So $61 or less is a fair price, in my opinion, to purchase a share of stock of this company. Now, the Drew price, or the 5-star price, is going to be $36. And currently, they are at, guess what? $32. So they are at an amazing price point right now to purchase, in my opinion. They are below that $36. This is going to be more of a higher risk, but I do believe there's a lot more upside when it comes to this play specifically. Viacom's kind of really taking a hit, but it's a very solid company, and the financials are absolutely fantastic, in my opinion. If you take a look at the revenue growth, last year they were about 13.20%, so it's above that 10% that we like for growth stocks. And it also pays a dividend. So it's a dividend company, a high dividend yield, if I do say so. 2.95% dividend yield is really high, and they have a solid revenue growth. The gross profit margin is 40%, so very solid gross margins, and the net profit margin is 12%. So they're making a profit, and a pretty solid profit, I would say so myself. I really like this company. I don't think they're going anywhere. This is also another long-term buy and hold. As you guys know, I am a long-term investor. But yeah, guys, that's going to be it. That is our 5th and final stock we were going to be talking about today. I hope that, was really enlightening for you guys, and hope that helped you and gave you some options to buy during this dip that we have this month. It is a buy market, so please take advantage of this market and buy as much shares as you can, because promise me, you will thank yourself later. But yeah, guys, please like, subscribe, leave a comment below for any ideas, and without a doubt, thanks for stopping by, and I'll go ahead and let you go. Appreciate it, and I will see y'all guys another time. Thank you.